All right, so welcome guys. This session is on this session we're going to be talking about how to make bank with news trading. So news trading is something that is very, very important, and a lot of people don't understand how to trade the news, right? We always hear that, oh, there's economic news that gets released every day, right? We've heard that you can actually make money with the news that happens in the world, be it a bad news or a good news, be it COVID, be it Russia-Ukraine crisis, be it Hamas attacking Israel, be any kind of news, be it an election of a new president in a major country like America, like the UK and all of that. We can make profits from that, from those economic events, even political events, right? But the thing is, how do you do it? So we come here, we look at all these events here, the red folder events, we have retail sales, we have CPI, we have which ones are even moving the market, and how do we do it? How do we trade in the market using news event? This is what we call fundamental analysis. This is what we call fundamental trading. So technical trading is the one where we have to look at charts, where we analyze the chart and decide where we want to trade. Okay, we want to buy here, we want to sell here because of historical price patterns, because of historical price action in the market, right? We are looking at the candlesticks. Where have they been on the daily chart? When have they been on the 4-hour chart? All that pertains to technical analysis. Now, coming to fundamental analysis can be very, very profitable when you understand how to do it and what kind of risk to take, what kind of rewards to expect, right? So it's very important. That's what we want to talk about on this session. We'll talk about a whole lot of things, right? So we say how to make bank with news trading. So there are two strategies for trading news, right? There's a high risk strategy and there's a low risk strategy. And when we talk about risk, we are basically talking about what kind of volume you are putting on your trade, what kind of lot size you are using on your trade when you are trading the news. Now, one thing to understand about news trading is that when the news comes out, before the news comes out, the only thing you are going to see is something like this. You can see previous, right? This is Forex Factory. This is a calendar. This is the economic calendar website where we basically keep track or keep tracks and keep our hands on the next possible fundamental events that will get released, right? So you see previous. Previous is the previous data for that particular asset, right? Is the previous data for that particular asset. Let's say in this case now we have GBP. GBP CPI. CPI is what we call Consumer Price Index, right? The last previous data for GBP CPI was 3.9%, right? So the new data that was released today came out at 4.0%. Now there's another one in the middle that's called the forecast. So before a news event comes out, you will see previous and forecast. You will not see actual. So the actual is the one that you are going to trade. The actual is the one we are going to trade, right? So you will see the time, you see the day when the news will be released, you will see the time where it will be released. This time is 2:30 my time. This is Nigerian time. If you're in the US, it will show you a different time. If you're in South Africa, it will show you, most likely it will show you 3:30 rather than 2:30. Right? So you will see the news, you will see the currency that will be affected, you will see the name of the event itself and all of that. But most importantly, you will see the forecast and the previous. Now, the actual, like I said, is the one we are going to be trading, right? So yes. Now, we said there's the low risk and the high risk. So for the low risk, let's talk about the low risk first. So the low risk, I have a few points here. The low risk, number one, use your current trading account. So you can have a current trading account and that you've been trading on, that you've been taking signal on, or that you've been trading on by yourself on. You can use that to trade, right? Which means that at the time of the news event, you're going to trade on that account. It could be $100, it could be $1,000, it could be $3,000, $5,000. You can trade on that account on the low risk strategy. Now, on the low risk strategy, we trade mostly the way you've always been trading. If on a $100 account, you should be doing maybe 0.2, 0.3 lot size on $100. That is not bad. That is okay, right? That's not bad. That's okay. You can use 0.02, I mean 0.02 or 0.03 for that news event. Now, something else to remember, to understand is that you will not know what the event is, what the news data is going to be. So we said we'll see the previous, we'll see the forecast, but the actual is what we're waiting for. There is no way for us to know what the actual is going to be like. There's no way, right? So we don't really know for a fact where the market is going to go, buy or sell. There are people who will come on the chat and use technical analysis to try to explain where they think the news, when the news comes out, what it's going to do, right? Now, you can be right. Anybody can actually come to the chat and do technical analysis and show you, okay, price is going to come here, it's going to do that, it's going to do that. If the news is a high impact news, it will disrespect everything you see on your chart already. It will literally break all the rules in the chart, your support, your resistance, and all that. The market will crush all of them, right? If it's really high impact, if it's really a huge surprise. So a surprise, when we say a huge surprise, a surprise is if there is a big gap between the actual when it is released and the forecasts. That is what we call a surprise, or a big gap between the actual and the previous. So if there's a big gap when the actual is released, if you notice that there's a huge gap between the data that's released for actual and the forecast, that is what we call a surprise. The market literally is surprised at the data. That's why it's called surprise. Then, or the actual, the disparity between the actual and the previous is very large. It surprises the market and pushes the market in a particular direction for a sell or a buy, right? So if that happens and is huge, right? We saw a lot of that last year. If that happens, you will see that the market will not respect any support, any resistance, any structure, or anything. So if you go and use technical analysis to analyze the chart, you can get burnt that way. So instead, just think of it like a data point that you don't know. You don't know how the data is going to be. You don't know if it's going to be good or bad. You don't know if it's going to move the market for a buy or a sell. So you just have your own strategy that you're going to use to trade. So the goal for news trading is to make profit whether the market goes up or comes down. Make profit whether the market goes up or comes down. This is not the kind of news where you start to wonder, where is it going to go? Or is it about to buy? Is it about to sell? You have no idea whether it's about to buy or about to sell. What you want to know is, how do I make money from this? Whichever the market goes, wherever the market goes. If the market goes to sell, I make money. If the market goes to buy, I make money. That's the most important thing, right? So we said the first thing, you use a low lot size. You use your normal trading account, you use a low lot size, and then target 20 to 30 pips in the market, and you take profit. That's 200 to 300 points, right? Between pips and points, whichever one you understand is fine. So you are targeting 20 to 30 pips and you are out of the market. Most of the time, the news will push price beyond that, but you can take your profit early and come out, because there are times where the market will move in a particular direction. You will be like, wow, it's going to sell. And then it starts by selling and eventually reverses and starts buying. Just like what we saw at the data, non-farm payroll data we saw last Friday, the first Friday of this month, when we traded non-farm payroll, right? The thing started selling initially and then eventually reversed and started buying, right? So when you take profit at 20, 30 pips, you are good. You have banked your profit. You are done with that trading, out of the market. Most of the time, this will happen in 1 minute or 2 minutes, max 2 minutes, or max 2-3 minutes. You are out of the market, right? In most cases, it will be done in 1 minute. You're out of the market. That's the way you need to trade the news. It's not something that you need to be greedy about. And like, oh, I want to catch 100 pips on this trade, right? Sometimes you will get that if the market has a huge surprise. If the market has a huge surprise, sometimes you get 100 pips. If you are trading gold, you might even get 200 pips or more. If the news event is actually very, the disparity is more, the surprise is huge, You will see how that you can move, you can make a lot of funds, a lot of money from that. But in the if that's, you don't know if that's going to happen exactly. So the best thing is take your 20, 30 pips and you're out of the market. Someone said you can never go broke taking profits. So if you won't go broke taking profits, it's best to take that 20, 30 pips and you're out of the market. Now, when it comes to general trading, technical analysis trading and all that, you can enter a trade and let your trade keep going. Let your profit ride. That's fine. But the major reason why you want to take profit if you're on a news trading is because the market has potential to move very fast and then reverse very fast in the other direction if you care it's not taking. It can move, it can sell, and then eventually reverses and start buying all within a few minutes, right? So you want to target 20 to 30 pips and you're out of the market, or 200 to 300 points and you're out of the market. 20 pips is 200 points, 30 pips is 300 points, right? So what's the high risk method? We say that's low risk. The high risk method is create a totally different account for this particular trading. So when you want to trade the news, you look at the economic event. We're going to, down on this slide, we'll look at some economic events that are very important for us to trade, for us to watch, right? On a monthly basis. So the first thing you want to do is create a separate account. When I say create a separate account, you already have an account on Vantage Markets, right? Just create a different live account. You have money on one. Let's say you have $1,000 on one account, and you want to be able to, you want to trade this, take this trade. You want to trade NFP, for example, non-farm payroll, for example. You can create a new live account on our platform. You just log into the dashboard, log into the client's area. You create a new live account. When you create a new live account, you will transfer money. You can transfer $200, $100, $500 to that place. That is what you want to use to trade. The reason why you are doing that is because that money you are transferring, you see, we call it high risk. This high risk is also high reward. Low risk is low reward. High risk is high reward. So if you're looking to, if you've seen a scenario where someone had a $1,000 account and then news happened and they flipped the account to 2,000, 3,000, this is the high risk method that they used to achieve it, that we used to achieve it. So it depends on your personality. What is it between the high risk and the low risk? It's just a question of which one resonates well with you, resonates better with you when trading news events, right? So create a separate account, a live account for that. You will see it there created for you. You just move the amount you want to trade into the account. And the reason for that is you want to be able to take a good risk. You want to be able to take a good risk on that account while maintaining your normal account the way it is. Let's say you have a $1,000 account and you normally trade 0.05, 0.05, or 0.1 sometimes on your trade. That's your normal lot size. But now you can decide, okay, for this news event I'm going to trade, I'm going to take 200 or 300. I'm going to create a new live account. I'm going to take $200 or $300 and put it in this account. I'm going to risk for this trade. Or you can just decide, you know what, I'm going to leave my normal account. I'm going to create a new account and I'm going to fund it afresh. Whichever one you choose is fine. So you create a new live account for this purpose and you fund it with the amount that you want to use to trade. So number two, you are going to be targeting to trade a sizable lot size. A big lot size. It's not going to be $100 and you're trading 0.01. No, this one is going to be huge. You might use between 0.2 and 0.5. There are people who trade on this, who do news trading with one lot size on $100, one lot size. Because the thing is this, you are not looking to take too much profit. You want it to trigger, go to 20, 30 pips, you collect your profits and you have made money. Imagine on the trade right here, you are using a lot size of, let's say 0.5. And then you take, your trade goes to 30 pips. Your trade activates and goes to 30 pips. That's $150 for you. It can be in 1 minute. That's $150 for you. It can be 1 minute, right? Now, if you use one lot size there on your trade, depending on the capital you have, you can see how you can easily run into $1,000 or more within that short period of time. It could be a minute or two, right? Yes. So that's what you are not using a small lot size for this particular trade. You are taking this is a high risk, high reward trading, high risk, high reward kind of trading. This is the risky, this is the high risk part. This is not suitable for everybody. But there are some people who this is the way they like to trade. They like high risk, high reward, right? They don't like to make little money. They will prefer, okay, let's wait for this thing. Let's really leverage it and make a lot of money, and we'll wait for the next one. There are some people, they only trade the news. That's all they do. They don't look at chart at all. They only trade news. They trade only on days when the news is going to be released, right? Then number 3. Okay, we said target 20 to 30 pips. Yes, just the same thing we said before. Target 20 to 30 pips, which is 200 to 300 points. That's what you're targeting. 200 to 300 points, take profits, right? So when you're entering this trade, your goal is to enter this trade within 2 to 5 minutes of when the news is going to be released. Within 2 to 5 minutes of when the news is going to be released. Okay, I'll talk about that a bit more. So entry, what is the entry? How do you enter this trade? How do you do it? Entry, set a buy stop and sell stop order on the chosen pair. So you pick a pair that you want to trade. Let's say the particular news is coming out. We're going to look at several things going forward. Everything will come together soon. So when you pick an instrument you want to trade, let's say a news event is coming out for the USD and is non-farm payroll. So what are you going to trade? Okay. For USD pair, that means you're going to trade a currency that's correlated to the USD. It could be Euro USD. It could be XAU USD, which is gold. It could be GBP USD. It could be USD JPY. All you need to do is pick 1 or 2. If you are good enough, you've done this. If you do it for a period of time, you can begin to take trades on 2 different instruments at the same time. But when you're just starting, you may only be able to concentrate on just one. Maybe you pick Euro USD, or you pick GBP USD, or gold, right? Yeah. So that's what you want to do there. Entry, that's how you pick it. 3 to 5 minutes before the news is released. You're entering your pending. This is a buy stop and sell stop are called pending orders. They are called pending orders. They are not instant order. You're not entering buy or sell. That's what I said before. When the news is coming out, you don't say, oh, I think it's going to buy. I think it's going to sell. That's a recipe for burning yourself. There are sometimes you make money from it, but sometimes you will lose all your money from it. So the best thing you are doing, the best way to trade news is to use pending orders. Buy stop, sell stop. A buy stop order is a continuation order. A sell stop order is a continuation order. So it's telling you that if market goes up, it will trigger and buy for you. If market comes down at the time the news comes out, it will trigger and sell. So whichever one activates, you will cancel the other trade because you are setting 2 trades simultaneously. You are setting a buy stop, you are setting a sell stop. So if price will not go both ways at the same time, it doesn't do that. Price will not go both ways at the same time. Price will go in one direction first. When price goes in one direction, it will trigger. If it goes to a buy, if the thing is favorable and it goes up for a buy, your buy order will be triggered. Your buy order will be triggered, activated. Your buy order will be activated and you'll be on a buy trade. Then at that time, the sell order, the sell stop order that you also said, you cancel that one, you delete it. You delete that order and maintain only the buy order that you're already in now. If the market doesn't go, if at the time news comes out, the market doesn't go to a buy and starts to sell, that means your sell stop order will be activated. And once your sell stop order is activated, that means you are going to be in profit immediately. That's the way it is. Once your trade is activated, you are in profit straight up. You are in profit immediately. So once that activates, you can then cancel the buy stop order that you set because now your trade is selling. So now you can just watch that one. Once price gets to 20, 30 pips, you collect profit. You close manually and take profit, right? Now, if you want to set your take profit for 20 or 30 pips, it's fine. But most of the time from experience, I can tell you it will be very difficult for you to set the stop loss and take profit at that time. It will be very difficult because the news happens very fast. So what you can do then is basically manually close the trade. Once the trade is in 20, 30, 40 pips or so, 20 to 30 pips, like we said, you just manually close the trade. Manually close the trade and you are okay, you are good, right? So for USD news, these are the pairs you are going to trade. For USD related news, you are going to be trading either, not all of them, either GBP USD, AUD, XAU USD, which is gold, Euro USD, or USD JPY. Like I said, when you are just starting, pick one of these instruments to trade. Just pick any one, pick one. Now, the one that is most volatile are XAU, which is gold, and GBP USD. Gold, GBP USD are the most volatile. In fact, USD JPY is even also volatile too. Volatile means that is what is likely to make you more profits. So GBP USD, gold, or USD JPY are all likely to make you good profits. They will make you more profit than Euro USD. Euro USD will not make you as much profit as USD JPY or GBP USD or gold. Yeah. So the thing is that, but for gold sometimes have this issue where the dollar index is going in one direction, the dollar is buying, gold is selling. There's usually that conflict. It happens once in a while, right? So you may decide that, okay, I don't want to trade on gold at all, but gold historically, from experience, gold is a very good instrument to trade during news. So it's a question of picking one. Pick one, either gold or GBP USD or USD JPY. These ones will make you good profit. The Euro USD is the one that may not move very fast. Euro USD may not move very fast. If GBP USD is giving you 50 pips, Euro may be giving you 20 pips. If GBP USD is giving 50 pips, gold may be doing 100 pips. 100. And then Euro USD will be doing 20. USD JPY is going to likely be doing 35, 40. So USD JPY is doing like 40, Euro USD will do like 20, GBP USD will do like 50, 50 plus, gold will do 100. That is just a comparison. I'm just trying to show you which ones are likely to be more profitable when it comes to trading the news, right? So you pick the one you want to pick there. Then when it comes to GBP news, for GBP news, trade GBP JPY, or GBP AUD, or GBP USD. So you pick one of these pairs. Like I said, you can start out by trading just one. Start out trading one. By the time you are mastered, you've gotten used to the news. You've gotten used to the news event. Of course, then you can then decide, okay, I'll trade on this, I'll trade on this. Yeah, because it can take you time, right? So it can take you time to place one trade here and then place another one. It means that you have to be really good at it. When you've gotten good at it, then of course you can do that, right? But then one is enough for you to make money for every event. Just one trade is enough for you to make the money on every event. It's just enough, right? Then for Euro news, trade Euro JPY or USD JPY. So the one that will make you more money during times when Euro news comes out is Euro JPY. Euro JPY moves faster than USD JPY. Euro JPY moves faster than USD JPY. So if there is a Euro-based news, Euro JPY might move faster and make you more profit than Euro USD, right? Then cards news. For card news, trade card JPY or USD CAD. Card JPY or USD CAD. So card JPY has a tendency to be very good when it comes to trading Canadian news pairs. So whenever there's a news coming out from Canada, the best instrument to be trading a lot of times is card JPY. Card JPY. Rather than USD CAD. USD CAD is not bad, but CAD JPY is better, right? Yes. So for AUD news, trade AUD JPY or AUD USD. So this one, you can trade anyone. AUD USD is good. AUD JPY is good, right? So you just pick one and you can trade whenever there's an AUD news coming out, right? So we said within 3 to 5 minutes before the news comes out. This is when, of course, you would have already said it. You would have already known, because when you go to the economic calendar here, you can already see the news that will, today is Wednesday, and I can see news already that will come out tomorrow. I can see news that will be out tomorrow. I can see news that will be out on Friday. So I already know ahead of time that there's going to be an AUD news by 1 a.m. tomorrow night when I'm still sleeping. Or do I want to wake up and trade it? It depends on you, right? You wake up and trade it, it depends on you, right? So of course you trade it, this whole thing doesn't take like 5 minutes. You enter the trade, you take profit, you're out of the market, and you go back and sleep, right? So if that's something you like to do, it's fine. But of course, if you don't want to also do that, you can focus on trading more of the other pairs, news from the news from the USD economy, which is from the US. That one will usually come out in the afternoon all the time. Whenever there's a US news, it will be from afternoon to evening. In fact, it's mostly in the afternoon, but only a few cases it might be in the evenings. Then if a news is coming out from the UK, it will usually be in the morning, Nigerian time now, to usually be in the morning, right? If something is coming out in the Eurozone, it will usually be around morning to afternoon, between let's say 9 a.m. to somewhere around 2 p.m. thereabout. That period is when Euro news are usually released. For the UK, 7 to 9 or 10 a.m. the news comes out already, right? Just like this morning now, we had this GBP CPI, and it got released by 8 a.m. 8 a.m. You see? So yeah. Then that's for AUD news. Then NZD news, you are trading NZD USD. NZD USD is what you are trading during when you are doing NZD news, NZD USD. Then types of news to trade. Number one, employment data. So whenever you come on the chart and you are seeing a data that is related to employment, you know that that is an event that is likely to move the market, right? So let's look at this. Let's see if we can see any employment-based data. Can you see? Tomorrow morning, we have employment change from Australia, right? Now, when it comes to employment change, the most important, the country with the most important data is the US. When it comes to employment change, the one investors and traders watch the most is the data from the US. And that's the one that comes out every first Friday of the month, right? So that's the one I trade. I always trade that, right? So that's the one. Also, we do that live as well. We do that live. We do that trading live all the time, right? So you can see employment-based data here. Employment, we have 61,000 for previous. Then employment change, we have forecast of 15,000. You know, so you have unemployment rate, we have unemployment claims and all that. So the first two relate to the US. The second one refers to the USD, right? So employment-based data, very important. Employment-based data, that's number one. Number two, inflation-based data. Inflation is CPI. So whenever you see CPI for the UK, for example, today, the GBP pairs have been buying very crazily. GBP pairs have been buying. And the reason why GBP pairs started buying when CPI came out, look at this, CPI year on year came out at 4%. Since that time, GBP pairs have been buying. They've been buying some, have bought hundreds and hundreds of pips today. GBP USD, in fact, GBP USD did the lowest. GBP JPY literally made, I think, did well over 100 pips. GBP AUD did over 100 pips. GBP JPY did over 100 pips, all because of this data that got released this morning. GBP, look at it, GBP CPI 4.0. So CPI is inflation, consumer price index. It's called consumer price index. So it has to do with inflation. So inflation is something that the whole world has been battling with now for over the past 2 years because of all the issues with COVID, you know, with Russia-Ukraine crisis, a couple of other challenges that have been happening around the world. So now when investors are hearing something about inflation, they react, they take action. They want to make money from it, right? So yes, so CPI or inflation data is a very important one. Then interest rate data. So when you go on the chart, Now, all these events we're talking about, they are usually denoted on Forex Factory as red folder events. They are all red folder events. You notice that all of these now are red folder events. So you will always see that these events we're talking about are usually all red folder events. Red folder events, right? They're usually all red folder events. So yeah, so that's what you're looking for. Then interest rate now is the third one, right? Interest rate. So what you are looking for most of the time is we are looking for interest rate data. Any data that has to do with rates. Let's look for it. Look at this now. This is Tuesday next week. You have monetary policy statement. So anytime you see monetary policy statement or you see rates, or let's look at this now. So you see BOC monetary policy, BOC rate statement. Anytime you see rate statement or rate event or monetary policy or anything is dealing with interest rates. And that is going to be a very volatile event that can make you good money. That can make you money. So for this one now, the first one here, we are dealing with JPY pair. So for this JPY pair, we can definitely, JPY currency, we can definitely trade USD JPY. USD JPY or CAD JPY. No, USD JPY is going to be good for that one. USD JPY is a good pair to trade for JPY pairs, JPY events, news events. Now, when we look at this one is CAD. This one has to do with Canadian dollar. So in this case, like I said, any event that has to do with Canadian dollar, you trade CAD CAD or CAD JPY. CAD JPY or CAD CAD, right? So now another thing with CAD events is that they will usually also be released in the afternoon. They are usually not the ones you have to wake up to trade. They are the ones that will be released in the afternoon, right? Yes, that's for CAD events. So these are all interest rate based data. Anywhere you see rate event, monetary policy, rate, official rates, or you see refinance rates, whatever rate you see, that has to do with interest rate. And they are usually very, very volatile events. For the US, you will see it as FOMC. Yes, you see it as FOMC in the US. And in the UK, you see it, in the Eurozone, you see it as main refinance rates. There are so many of them, right? For all economies have their own. The one that really is not even, doesn't move the market so much most of the time is the ones for Swiss francs. But the Swiss economy. And the reason for that is because the Swiss economy historically is one of the most stable economies in the world, which is also why a lot of people want to use Swiss banks. I'm sure we've all heard of Swiss banks. The reason why people like to use Swiss banks is because of stability in the financial system. They have a lot of they have a lot of rules that have to do with keeping investor data safe or people depositors data safe. So a lot of even people who've looted monies from all around the world like to go and keep it in Swiss banks, right? So the Swiss economy has been very stable for a very long time. So the interest rate in Switzerland is very low. Inflation is very low. Everything is very low. There's just stability within the system, right? So most of the time, interest rate data for Switzerland doesn't move the market that much, which is CHF. It doesn't move that much, but sometimes it does. You might as well just get ready for a CHF based data, right? So most of the time, the reason it doesn't move that much is because there isn't much they are changing. The Central Bank of Switzerland doesn't change things randomly like that. They don't move interest rate very high or low like that. Like in this year now, there's the anticipation that there's going to be a lot of interest rate reduction. They call it interest rate cuts happening in the next few months. And whenever those interest rate cuts happen, the market is going to react like mad. Just like what happens whenever the market increases interest rates. When the central banks around the world increase interest rates, the market reacts like crazy and it creates very profitable opportunities. The same thing when central bankers begin to cut interest rate now, which is reduce interest rate from wherever it is now to a lower point, even if they just reduce it by 0.25% or even 0.1%, the market will react like crazy because it tells the market something. You see? So these are the events that we're going to be watching: employment-based data, inflation-based data, which is CPI, interest rate-based data, all right? So this is how you trade the news events. This is how you trade news events. And then news events, like I said, when starting, can be very, very profitable. You just need to learn how to trade it, all right? So this is how to trade news. And yeah, okay. All right. So now